You are listening to Wealthy Muslim Woman Podcast, episode number 46 with Saima Ali, MD. Assalamu alaikum, everyone. I recently got a couple of questions regarding risks with stock market, and I did a Facebook Live, and I thought I'll share in podcast here too, since some of you may not be on my Facebook or Instagram or my email list. So I hope that this helps and answers some of those questions. And please reach out if not. And follow us on Instagram, Wealthy Muslim Woman, or Facebook, Wealthy Muslim Woman. Also, you can send me an email at admin@wealthymuslimwoman.us. And of course, check out the stock market training that's for free on the website. wealthymuslimwoman.us is the main website, and then you could see a link for the training there as well. So I hope this helps. This is the Facebook Live that I did, and we'll just be putting that up here in this episode. Hey everyone. One of the questions that I keep getting about the stock market is that doesn't it involve a lot of risk? Will I lose all my money? So why should I be investing in the stock market? It's just very risky. You're always hearing that, the stock market is crashing or stock market is doing well. So isn't it risky to invest in the stock market? So I'd like to talk about it by first thinking about what the alternatives are. So you can either keep working your 9-to-5 job, keep earning money, and then spending that money, and then working some more to get that money, and then spending that money on the bills and utilities and everything else. And at the end of the day, that money is gone, okay? Or you could try to save some money and maybe put it under your mattress or save it in a checking account. But money that's kept as a cash loses value over time. So if you recall things that you were buying maybe a year, 2 years, or even 5 years ago, they were at a lower price than what they are costing now. So over time, money loses value when it's held in cash and when it's not invested. So either you can keep working and paying your bills and spending that money, so that money is gone, or you can keep working, save some money in a checking account or in a bank account, and over time, that money will also lose value, okay? Or you can try to invest that money, okay? This is what's called making your money work for you rather than working for your money. This is what the rich people and wealthy people do, okay? And one of the ways of investing is through the stock market. So you can join the stock market and purchase other businesses or other companies that are doing good work, a lot of work, and they are generating profit, and then they will share that profit with its stockholders, okay? So investing is deciding to put your money where you think the money will grow. It's trying to make a smart decision with money, as opposed to gambling, which is also haram, but gambling is something that you're not sure if it's going to make money or no money. It's like flipping a coin, 50-50 chance, and you may lose all your money or you may gain money, okay? Versus speculation, which is something in between gambling and in between investing, which is also kind of trying to predict where the market will go or where something that you're investing in will go. But investing is trying to look at what the past has shown and what you think the future will be, and putting your money that way. Now, even with investing in the stock market, there are still risks involved. So life is just risky in general, okay? So there's risk involved with everything. So even when you're eating food, there's a chance that you may choke on the food. Or when you're out driving, there's a chance that you may get into an accident. But we still take those chances because that's what life is. So investing is something where, yes, you can lose money or it may grow, okay? So the way to there are a couple of ways to reducing your risks in the stock market, okay? One way is always invest in what you are familiar with. Never invest in something that you are not comfortable with or you are not familiar with. So if your friend tells you that there's this new company out there and there's big hype about it, then do not just invest out of it, just because somebody told you so. You need to do your own research and you need to read up and invest because you think that's a good decision, not because somebody told you that it is. Another way to minimize risk with the stock market is by avoiding individual stocks and investing in what's called mutual funds or ETFs. These are basically group of companies or group of stocks put together, and you buy them as a group. Now, the average person is actually not smart to invest in individual companies. There are only a couple of people who have done really well in the stock market, and we know one of them, Warren Buffett, and all he does basically is he goes to his office and he reads newspapers and magazines. Like, that's his main job. He's just sitting there reading for 5, 6, 8 hours a day, and that's how he's analyzing the companies that he's going to invest in. And we do not have that time, being mothers and having other family responsibilities and having other jobs to pay our bills and do all those things. So we don't have that time to invest, to try to search for the best companies that are out there. So it's always best to invest in mutual funds or ETFs versus individual stocks. Now, another thing to keep in mind is that investing in the stock market is for the long term, not for the short term. So over the short term, the stock market can go down. So this week, next month, next year, we don't know when the stock market may go down. And if you need to sell your money at that time, then you will be losing money, of course. So the only way you lose money is if you buy high and sell at a low price. And one way to try to avoid that is by investing money for the long term and not for the short term. So over time, the market goes up. So in a typical period of time, like over a 10 period time, the market will go down once and up for like 7-8 years. We just had the biggest boom since 2009 to now. And now with Corona, the market just went down. So now would be a bad time to sell because market is lower than what it has been previously. Okay. And then another thing to keep in mind to minimize risk is never buy or sell out of a fear or a hype. So all these stock market gurus that come on these news channels, you should not be trusting them. It's all basically prediction. Nobody can know for sure if the market will go up or down. The market does what it does. Okay, it may go up, it may go down. Nobody was expecting a rise over the last couple of days, and it did well. And I believe yesterday the market was down again. So I don't follow it on a daily basis because I'm not thinking of selling my stocks or selling my investment. So this is for the long term. You put your money in and you basically leave it, and not for the short term. Okay. Now, another thing to do is always diversify. So one, we are diversifying by purchasing mutual funds and ETFs and not individual stocks, because you are buying a bunch of companies and not just one company. But another way that you should be doing it is by keeping some of your wealth in different buckets. So one example would be keeping some money in cash, like an emergency fund. So I did my last podcast on emergency funds, and you should have enough money to survive. Even if, God forbid, you lose your job or even something else happens, you want to be able to survive for a period that you feel comfortable with. So a month, 2 months, 3 months, whatever your comfort level is, you should have emergency fund for that. For 6 months or a year, even some people do that. So this money should be able to cover your monthly expenses. So if you have a mortgage, if you have a rent, whatever transportation expenses you have, however much money you'll need to buy food or other things. So that's another way to minimize your risk in the stock market. But I wanted to finish the last point, and I'll just leave it as comments under the other video. I think that's the best way to do it. I'm not sure. So diversifying, keeping some money in cash and investing some, having an emergency fund. That's really important. So I hope this answers about risks or minimizing the risks with the stock market. If you still have any questions, please leave them in comments and I'll be happy to answer them. Okay, bye.